Welcome back to the Property Apprentice Podcast. I'm Debbie Roberts, owner and financial advisor at Property Apprentice. And in this bonus episode, we're unpacking the latest data on building consents from Stats New Zealand and Westpac and what it all means for homeowners, property investors and developers. The numbers for April 2025 may look like a downturn at first glance, but there's more to the story. In April 2025, there were 2,418 new homes consented across New Zealand. That's a 17% decrease compared to April 2024. Of these, 1,148 were standalone houses. That's a decrease of 15%. And 1,270 were multi-unit homes, which saw a larger decline at 19%. The breakdown of multi-unit homes includes 1,105 townhouses, flats and units. That's a decrease from 1,296 in April 2024. 80 apartments, which is a decrease down from 98, and 85 retirement village units, which is a decrease from 178. When adjusted for seasonal variation, the number of new home consents fell 16% in April, reversing the 11% rise in March 2025. Seasonally adjusted consents for standalone houses fell 5.5%, following a 4.2% increase the month prior. So is this a sign of trouble? Not necessarily. Economists note that these month-to-month fluctuations, especially in apartment consents, are common due to the way large projects are processed in batches. April's dip may also have been affected by public holidays like Easter and Anzac Day. Looking at the broader trend, 33,554 new dwellings were consented in the 12 months ending April 2025. It's a 5.2% decrease from the year before. But here's the key detail. Standalone house consents actually rose by 2.4%. to 15,769, showing resilience in that category. In contrast, multi-unit consents fell 11% to 17,785. This includes 14,192 townhouses, flats and units, down 12%, 2,090 apartments, down 1.8%, 1,503 retirement village units, which is down 14%. Despite the decline, the 12-month rolling total has remained steady for about a year, hovering around the 34,000 mark. This suggests that the sector may have found a floor, particularly for standalone homes and townhouses, which make up the majority of new builds. According to Westpac senior economist Satish Rinchod, while consent numbers fell sharply in April, it's not a sign of renewed weakness. Instead, it reflects volatility in apartment projects. More importantly, the longer-term downturn appears to be flattening out. I also think that there's a good chance that the reason that the number of consents for standalone houses is increasing, whereas multi-income properties are decreasing, is because there's an oversupply of some of those multi-income or apartments in a number of different areas across the country. So until that balances out a little bit more, we're likely to see more development in the standalone type dwellings. Consent issuance has been relatively stable for the past year, and Westpac expects it to stay around current levels in the near term. Ranchod says that the seeds of a recovery are already in place. Mortgage rates have dropped significantly thanks to the Reserve Bank cutting the official cash rate, the OCR, with the possibility of more cuts on the way. In addition, house prices are beginning to rise again, and home sales have returned to average levels. These factors suggest that we could start seeing an increase in new developments being consented in the second half of 2025, followed by a gradual rise in construction activity. However, this recovery won't be immediate or sharp. There's already been a large increase in housing supply in recent years, as I mentioned earlier, which can reduce the pressure for rapid new development. What about commercial construction? The non-residential side of the building sector is also showing mixed signals. Over the 12 months to April 2025, the value of commercial consents fell 7.6%, slightly worse than the previous 7.2% drop. The amount of floor space consented also dropped 17.7%, though that was a slight improvement from a 21.9% fall earlier. In terms of sectors, retail space development remains limited, new industrial and storage space is declining, office development is easing, though there's still strong demand for refurbishments. Businesses remain cautious. Many are holding off on major capital spending due to ongoing economic uncertainty, which continues to dampen confidence across the commercial sector. So what does all this mean for property investors and buyers? The construction sector may appear subdued, but the numbers are pointing to stability, not decline. With cheaper lending, more favourable buying conditions and less competition, this could be the best time in years to position yourself before activity begins picking up again. If you're thinking about building, buying, or investing, now's the time to start planning. The current lull may not last long, and when the market turns, those who acted early are usually the ones that benefit the most. Thanks for tuning into the Property Apprentice Podcast. If you found this episode valuable, please share it with someone who might find it helpful too. And as always, if you need support navigating your next property decision, feel free to join us at an upcoming How to Succeed with Property Investing event. Register via our website, propertyapprentice.co.nz, and these events are all held online, so it doesn't matter where you live. Or alternatively, you can book a meeting with my husband, Paul Roberts, for free and no obligation via our website as well, propertyapprentice.co.nz. Until next time, thanks for listening. Hey there, want to stay on top of the latest property news and trends? Subscribe to the Property Apprentice Podcast for weekly updates that will help you to navigate the market like a pro. We cover everything from insider tips to expert interviews, so you'll always be in the know. And don't forget to ring the bell and hit that subscribe button here on our YouTube channel for even more helpful content to boost your property journey. Check out the link in the description to subscribe to the podcast, and we'll see you in the next episode. Happy investing.